We expect the euro over the next few months to continue to weaken, but maybe not at the same pace that it weakened in Q3. By the time we started Q4, we were sub 126 in euro dollar. We think a move down to the 120 level is certainly possible, certainly over the next kind of 3 to 6 months. However, around about that level, we would then think that would be probably considered about fair value, that it shouldn't really drop below 120. That's not our base case at all. Now, the outlook for the euro, we still think there is further downside though, so the outlook is still quite bleak. We have the ECB on the one hand really trying to expand its balance sheet to buy all of these asset purchases, and then on the other hand you also have the fact that they may fail to expand their balance sheet in any meaningful way. We don't think that they're going to do QE or buy sovereign assets anytime soon. Yes, they're embarking on a QE light version by buying asset-backed securities, but we think that they will keep that quite small and the balance sheet won't enlarge as much as they would like. Likewise with the TLTRO auctions, the first one earlier in September, that was not exactly a great success. So it's going to take a while for them to enlarge their balance sheet. And if the balance sheet doesn't start to enlarge and the ECB doesn't come up with anything new to try to enlarge it, that could be what really starts to maybe put a floor in the euro at some stage over the next quarter. Also over this Q4 period, we have the results of Eurozone stress tests. We do think there is a risk there. If the stress tests aren't considered lenient enough, then we could see it start to weigh on the euro again as the ECB's credibility and the banking sector's credibility yet again comes into question. We would also point out a couple of things regarding the euro. So on the one hand, you have growth. Growth has been very, very weak. We expect that to remain so. We also believe that inflation is going to stay quite weak and we could actually dip into negative territory there. So there's still going to be a lot of pressure on the ECB to take action. Is whether or not they actually do take that action. Now, the most powerful thing from them from an inflation standpoint and also from a growth standpoint is to have that weaker euro. So that could be the tool that they use. We expect a lot of negative euro rhetoric coming out of ECB members. We also expect them to generally try and talk down the euro every opportunity they can. We've seen that happen already. So far, it seems to be working. We don't think they're going to get against the trend. They may dangle the prospect of QE in front of the market, but we don't think they'll pull the trigger. Eventually, the market will take note of that, and potentially that could put a floor under the euro. But we still think there could be 500-600 pips left of downside over the next 3 months.